Good afternoon. Hope you're enjoying this sunny Thursday here. We have news on the Fed, a lot of news on the Fed. So we're going to spend a lot of time kind of breaking down the Fed decision this week, but more importantly, the Fed press conference just yesterday. My name is Brandon Steele, financial advisor with Mainsail Financial Group just here in Bellevue. And our goal every Thursday is to bring to you the market news, data, trends that we're watching, and hopefully weed out a bit of the noise along the way. So before we get into the main event of the week, which of course is the Fed, I want to back up a little bit, talk about how we got here. So first, let's start a little bit on inflation. Friday last week, we had PCE numbers, all generally pretty in line with expectations, but core PCE did actually increase slightly now from last month. Now that's not, it's not a huge issue. It was, from 0.2%, I think last month to 0.3% this month. But it is relevant, right? We are still seeing that there are some areas of inflation where it's not necessarily slowing every month or a continual sign of that. Fast forward to this week, before the Fed came out with their announcements and their press conference, we also had ADP employment report. Now this showed only 106,000 jobs added for the month of January, this would be, which was well below expectations. Now, here's the challenge. I've mentioned this the last 3 months, I think it is now. The ADP employment report was a data point that we've paid quite a bit of attention to. They put it on pause because it wasn't the most accurate, I think is the best way to put it, and kind of revamped what goes into this number. And it started again, I think 3 or 4 months ago. And really, since that has come back out, it's been quite different than what we see in the non-farm payrolls number, which is really an important one to watch, and that comes up on Friday. So again, this was well below expectations, but let's take it with a bit of grain of salt here because it has not been the most helpful or accurate to show some of the other data points that we get through the week. We also had job openings come out on Wednesday, which were back up to 11 million job openings yet again. But most importantly, it was all about the Fed. So Fed did hike 25 basis points, which really I don't think was much of a surprise to anybody. I think there were still some folks out there thinking or hoping the Fed would hike 50 basis points, but they were very clear coming into this that they were going to slow down the pace of the rate hikes, basically suggesting this would be a 25 basis point hike, and that's exactly what we got. Now, what really changed is the tone from the Fed, and we have seen the markets take off yesterday as soon as the Fed started talking, through today as well on Thursday. We have a lot of big company earnings today as well. That'll be important to watch. But, let's be honest, it's the Fed's market right now. And the Fed gave the market some signs of hope, I guess, in this conversation. I don't think it's entirely as warranted as we're seeing, but I'll share that here in a little bit in a minute. Basically, what the Fed had shared was right out of the gate, one of the first questions was asked about economic tightening or loosening. And they basically kind of hemmed and hawed. There wasn't exactly a clear answer because I believe in the same breath, he had mentioned that although the economic indicators are tightening, we're also seeing some loosening along the way, I think literally in the same sentence. So it was a little bit confusing, but I think what the market took from this was the Fed is starting to declare victory, essentially. And so we saw the market take off yesterday, again, especially today, especially in some of the tech areas where interest rates really make a big impact. We've seen quite a bit of a run in the last 2 days. Now, throughout the rest of the conversation, this is in the first 2 minutes, through the rest of the conversation, I think the Fed Chair Powell was very clear that they are not done yet. He had said time and time again, we're not done, job's not over, we're going to keep going until the job is clearly done. We see signs, but we're not there, and so on and so on. So the reason I mentioned earlier, I think that this might be a little overzealous is that although the Fed did hem and haw at the beginning, and it was very clear that, there was a little more hope, I think, in the Fed's tone than we've heard recently, through the rest of the conversation, it was very different. And so my question is, will he come back and try and right the ship here a little bit? In other words, did that come off more dovish or more hands-off than he really meant to? So we will see in the coming few days, weeks or so, we'll see if there is another statement from the Fed. but it's happened before where they didn't quite hit it the way they wanted to in the press conference. Whether that comes up or not in this session, we will see, but that'll be something to really pay close attention to. On top of that, we had initial jobless claims come out today, 183,000 lower than expected, and also even lower than last month. So pay close attention here. But really, coming up next week, we've got non-farm payrolls, which is huge in what otherwise in moving into the week after, a little slower week in data as the market kind of digests the Fed, and we see if they do come back and kind of make any additional statements on what was said on Wednesday. So it was quite the quite the show, and we'll see what's to come here in the next few days or weeks. I do want to touch briefly on a great question of the week we have this week, which is tied to the Secure Act 2.0. And the question is about converting 529 funds to Roth IRA funds. So this is a great opportunity that has been opened up through this new legislation. Went into effect past very end of 2022, went into effect in 2023. And one of the kind of lesser talked about items in there is the ability potentially to convert Roth IRA, 529 money, so college education money, into the beneficiary's Roth IRA. Now, there's a lot of stipulation around this, and honestly, there are still some things that need to be worked out through some of the legal side of this, but there is a great opportunity here for the right circumstance. So I'll share what we know so far, but remember that there may be some more interpretation that comes out, as with these things always go, some more interpretation that comes out that maybe either tightens or loosens the opportunity. Basically, what we know now is that this new provision will allow you to convert up to $35,000 of 529 monies into the beneficiary. This is the key. It has to be the beneficiary on the 529 into a Roth IRA for that beneficiary. All right. That is really key. You can't just convert it to your own Roth IRA. It needs to be the beneficiary of the 529. There's a lifetime maximum of $35,000. So, it's not, you can't do, whatever the balance is. There is a maximum. And the Roth IRA must have been maintained for 15 years or longer. On top of that, the only monies that are eligible for this conversion to Roth are the contributions and any growth, attributable to the contributions 5 years or longer previously. All right. So again, there's a lot more to come on this. What will be interesting to find out if you start looking, reading between the lines here. Well, so you can change a beneficiary on a Roth. So on a 529. So the question is, well, can you change the beneficiary and then convert it to that beneficiary's Roth? I don't know, and there's not a lot of clarity around that right now. These are the things that, unfortunately, we start to get more information as time goes on. But nonetheless, it's an important tool, something to definitely keep an eye on, especially if you have maybe oversaved to some degree to a 529. This may provide some more flexibility in the future. So thanks as always for the question. If you have any questions on your mind, definitely let us know. We'll try and answer them next week. In the meantime, enjoy the sunshine. Let me know your thoughts on the Fed and whether they'll come back out and reassess what was shared. And we will see you next Thursday at 3.